We'll be going over how to report the sale of your main home on your income tax return. So generally speaking, most people probably will not have to report the sale of their main home or their primary residence on their income tax return. In this video, we'll go over the reasons why most taxpayers don't need to do this, the reasons you may be required to report the sale of your main home on your income tax return, and then how to actually complete it under a couple of different circumstances, specifically the two main reasons why you would have to report it. So we'll go through each of those examples in this video. And so this was brought to my attention by a reader who had a question about what you would do to report the sale of your primary residence if you're not able to exclude all of your capital gain under Section 121 of the tax code. So that kind of leads us into the first part of this. So what we're going to do is we're going to talk about what Section 121 is first and when you may have to report it. So there's a part of the tax code that allows for residents to exclude the sale of their home, their primary home, up to $250,000 per taxpayer, or $500,000 for a married couple filing jointly. So that's the capital gain that they can exclude. For example, if you bought a house for $200,000 and you turned around and sold it for $600,000 and you were a married couple, you probably would be able to exclude the $400,000 of capital gains as long as you meet a couple of tests. They're known as the ownership and the use tests, but basically each owner has to have been on the title of the home for at least 2 of the previous 5 years. And each person has to have lived in the home as their primary residence for 2 out of the past 5 years. Now, there's a lot of different exceptions and exclusions and partial scenarios. We won't cover those in depth, but if you're relocating because of active duty, permanent change of station orders that take you out of the area, you can qualify for certain exemptions. If you're a qualifying surviving spouse and you meet certain criteria, you may be able to do the same, qualify for a larger exemption. If you relocate due to a change in employment, health, or other unforeseen circumstances, you may be able to qualify for a partial exclusion. But the general rule is you have to have owned the home and you have to have lived in the home for 2 out of the past 5 years. So what happens if what would make you have to file or report the sale on your tax return? So there are 2 different scenarios in your tax return that you would have to report. So first is if you can't exclude all of the gain, if you have to report some of the gain, then you would have to report it. And then the second is if you received a Form 1099, specifically 1099-S, which is the proceeds from real estate transactions. So if you receive a copy of this, generally from the seller or from a real estate agent, then you would need to report this even if you do qualify to exclude all of your capital gains on your tax return. And we'll walk through that scenario. And then finally, towards the end of this scenario, we're going to change up the numbers a little bit just in case you met the second criteria where you need to include some of the gains and pay taxes on it. So this is an example straight from the instructions for, I believe, IRS for Schedule D. So in this case, John Doe received his 1099 from Acme Brokerage Services. The gross proceeds were $320,000. And Not listed here is his basis, which is $100,000, and then he's got some closing costs of $20,000 that weren't reported on the 1099. So even if John is able to exclude all of the capital gain, and let's say he's a single taxpayer, he's owned this home for over a year, or he's lived in this home and owned this home for at least 2 years, so he meets that Section 121 exclusion, he still needs to report it. So the first thing that we're going to do is we're going to go to IRS Form 8949. That is the report of sales and other dispositions of capital assets. So it's hard to see. So that's the top of the form. And now we're going to, there are two parts. So part one is the short term, and then part two on the back is the long term. So one line item, this is how the form instructions direct you to report this. So the description of the property could be their address. It could be, shares of stock or mutual funds or whatever the case may be. In this case, it's his primary address. Since it's a long-term transaction, he's held it for more than a year. He would check box F because this wasn't reported on a brokerage statement. It was reported on a 1099-S. So let's say he acquired it in July 1st of 2022, and then he's selling it exactly 2 years later. In fact, let's take it one step further and just back that up a week so that there's no technical doubt at all that this was a qualifying transaction. So according to the instructions, he would write the proceeds, which was from line 1 of his 1099-S, puts that into column D. The cost or other basis, in the example, the cost basis was $100,000. There are codes that you would find in the form instructions. So we're going to go to the form instructions. This is the example we're talking about. And then we'll look in the instructions. Turns out the code E is having received a form 1099B or a 1099-S for a transaction, there are selling expenses that aren't reflected on that form. So that was the $20,000 we were alluding to. And then code H is you sold or exchanged your main home at a gain. You must report the sale or you must report the sale on Part 2 of Form 8949 as explained in the Schedule D instructions, and you can exclude some or all of the gain. So that's what codes E and H are for. In column G, we would make that adjustment for both the selling expenses and the exclusion so that when you when you net everything out, the gain is zero. And then we would also report it in a similar manner on Schedule D in Part 2, which is the long-term capital gains and losses. So all transactions reported on Form 8949 with box F checked. $320,000, $100,000 with the $220,000 of adjustments, resulting in a zero gain or loss. Okay, so that's how you would report it in the situation where you're able to exclude all of the gain. Now let's take a step back and say, what happens if we aren't able to exclude all of the gain? So we'll make a couple of adjustments. Let's just say that he sold this property for $520,000. So he's got $20,000 worth of the adjustment, and then he's got $250,000 that he's able to exclude. So, to answer our reader's question, in this case, the $250,000, because John Doe is single, would be the same reporting as $500,000 for a married couple filing a joint return. So if the cost and other basis is still the same, he would still mark E and H because it was reported to him on the Form 1099 with closing costs that weren't reported to him. And code H still applies because he's able to exclude part of the gain, just not all of it. So in this case, we're going to take the adjustment of the $250,000 plus the $20,000 of closing expenses, and we're going to put that in there. And now we're simply going to kind of net these out, the 520 minus the 100,000 minus the 270. And I do believe that that gives us, what does that give us? $150,000 worth of gains. So that's what we would report in column H. We would go all the way down here. I neglected to add the 0, but just to close the loop, you would total everything out. You would report all of these columns in here. So we'll go ahead and do it for this example. And if you're using tax software, generally speaking, it's going to automate all of this. So you're only having to enter the information that can't be automated. So now let's transfer this to our Schedule D by simply changing this up. Let's see, the $520,000. We're making that adjustment for $270,000, and we're reporting the $150,000 capital gain here. And then you net all of this out, and then you will complete the rest of Schedule D, which then feeds into your Form 1040. So that's how you would complete, or that's how you would report the sale of a transaction, report your transaction involving the sale of your main home in a situation where you cannot exclude the entire capital gain. So I think that's going to cover everything for this video. We'll put links in the show notes to resources that we've created specifically for 1099-S, 1099-B, which is the brokerage statement, if you're interested in that, as well as Form 8949 and Schedule D. So if you like our articles, please subscribe to our newsletter. If you like our YouTube videos, please subscribe to our channel and keep the questions coming. Please, I answer every question that I see pop into my inbox. I do notice that sometimes questions don't pop into my inbox, or questions that do pop into my inbox don't necessarily become available when I go to respond to them. So if I didn't answer your question, it's not because I'm ignoring you. It's probably because I literally did not see your question. So please don't be afraid to contact me if there's a question. And if I can produce a video that will help answer that question for the benefit of everyone, please let me know. So thank you very much and have a great day.